Hello and welcome to today's live technical analysis. We're going to be starting off with the euro against the US dollar. So, what happened earlier on today? We had France's preliminary CPI rates coming in hotter than expected, implying not persistent inflationary pressures, but actually an acceleration in inflation pressures. This 4 hour candle, I'm assuming, is the release of the Eurozone's preliminary HICP rates for April coming in hotter than expected, which appears to be on track. So, harder than expected CPI rates may be providing support for the euro, which can be seen from this 4 hour bullish candle now being formed. From a technical point of view, you could have said that this was a symmetrical triangle, but this trend line is way back, and as such, we should probably remove that. And then what we could do, we can see that this is an upwards moving trend line that has been validated on numerous occasions. So you could maintain a bullish outlook. However, if you look at the Bollinger Bands, they appear to have narrowed. And given that we're anticipating the Fed's interest rate decision in addition to the US employment data, the hotter than expected CPI print might be relatively muted in terms of supporting the euro. Why? Well, if you're expecting the Fed to be hawkish and the NFP figure to come in perhaps hotter than expected or implying a resilient labor market, then the dollar might appreciate against its counterparts. So, despite that, we might see a relatively muted reaction from the euro following today's financial releases. So, looking at the 4 hour chart, we would maintain a sideways bias. We have enough space between our support and resistance level in order for the euro to make its move following the release of the CPI print. For our bullish outlook, we can simply actually bring R1 slightly lower. I would place my R1 at 1.0740. So for a bullish outlook, we would require a clear break above R1. R2 and R3 will also be readjusted since we're bringing our resistance level closer to the price action. So as you can see, R3 was 1.0975, but that's a bit far from the current price action. Instead, I would opt to use this old low, as you can see here, taking the closing and opening of the bearish and bullish candle at 1.0810, and then we can keep R3 as it was previously. So 1.0810, that would be my R2. And then R3, we can keep it at 1.08850 or 1.0885. So you have R1, R2, R3, and then you have your support levels as well. Now, we still have an upwards moving trend line, which has not been broken recently. So you can see wick and another one here. RSI is at 54, so it might imply that the bulls have not taken complete control of the pair's direction just yet. Instead, I would not be surprised to see it going up to R1, failing to break above, and then staying between S1 and R1. In terms of the US, note the financial release of the US consumer confidence figure, which is due to release in today's American session. If it comes in better than expected, it might provide some support for the US dollar. Overall, I would not maintain a bullish outlook as long as it remains between S1 and R1. Instead, I would opt for a sideways bias between the aforementioned support and resistance levels. For a bullish outlook, I would require a clear break above R1 at 1.0740, and then the next potential target for the bulls could be at 1.0810. We need to see higher highs and higher lows being formed. Now, if it fails to break above R1, I would maintain my sideways bias. Because if it does meet resistance at this point, the next key financial release, or if you take it from monetary policy, would be the Fed's interest rate decision, which currently has 97, if I'm mistaken, percent probability for the bank to remain on hold. So that's the next big test for the Euro USD. For now, sideways bias between S1 and R1. In the unlikely event that it breaks below S1 today, and I'm emphasizing on today, if it breaks it after the release of the Fed's interest rate decision, then it would not be a surprise. So for today, if it manages to break below S1, I would switch for a bearish outlook, potentially taking aim for S2 at 1.060, which is a key psychological figure. It's around figure 1.060, and as such, you can see support here. If it manages to break below S1, next target could be 1.06. Lower than that, we have 1.0515. Today, we're going to be taking a look at Tesla, HSBC as well. We're looking at oil, cable, the Aussie, the Loonie, and the JPY. So if we look at USD JPY, now very nicely taking aim at R3, 160.20. In terms of resistance, I would not stay on the daily. I dropped down to the 4 hour. And I'll explain why. Look at the recent price action. How can I place R1 at 156.60 using the daily chart? We can go further back in time, or we could drop down to the 4 hour. So let's go back. Let's see if I'm not mistaken, 1990. Yes. So 1990, this was reached previously. As you can see, if I would have placed R1, I'd like to see something like this. 156.91, though. It's too close to R2 anyways. Like, whatever way we try to spin this, it's too close. R1 and R2 are bound to be very close to each other. So instead, the lowest point I would place my resistance for R1 would be 157.17. You might be wondering, well, why don't I place R2 here? Well, R3 was validated and found. So placing R2 here would not really make a difference between the distance between support and resistance. You could, in theory, place R2 here, but how big of that is that a difference? And if you come here, you can see you're ignoring this price action here. So R2 stays at 158.30. I'd place R1 157.17. Now, this move is widely thought to have been intervention by the Japanese government in support of the JPY. It reached above 160. That appears to be the new turning point for the government to support the JPY. We have our support and resistance levels. We still have an upwards moving trend line. Bollinger Band is tilted to the upside. 50 and 100 moving averages also to the upside. So technically, it implies a bullish outlook for the pair, but we have seen the government intervene. So any bullish outlook, in my view, would be short term, a day or two at the most, and not breaking above 160. If it does, we might see another potential intervention by the Japanese government. Moving on to the loonie. Now, we had placed R1, R2, and R3 way back, and you can see R3 was validated, 1.3840. R2, R1 is actually support. Note how the price action has found support and bounced off. So this would actually turn from red to green. For R1, the daily chart as well. Let's see. For R1, I take this old high. S1, I would readjust to 1.3637. So this would be my R1. I take this lower high as R2, and then I can keep R3 at the beginning of the downwards moving trend line. Having broken above our downwards moving trend line, I would now switch for a sideways bias. RSI at 52, Bollinger Band smoothing out, in addition to the 50 and 100 moving average, applying low market volatility. So sideways bias between S1 and R1, 1.3717. For R1, R2, 1.3777. But let's just round that up. 1.3775. 375 is not valid, so it needs to stay at 7 as well. So 1.3777. Maybe just higher. 778. This would be my R2. R3 I keep at 1.3845. It's valid to have support and resistance. Based on what we've just said, I would maintain a sideways bias for the particular pair, as long as it stays between S1 and R1. Now, bearish outlook simply breaking below S1. I would not have considered this to have been a bearish triangle because it would have been validated, let's say, as a triangle upon the most recent price action. Now, had we seen, and it's more than 2/3, had we seen this, like something similar to this bullish candle, but instead a bearish candle, reaching down to this level, right around here, maybe could have been a bearish triangle. Let's see volume as well. So for volume, you can go to insert, indicators, volume. You can look at OBV or simply volume. Declining volume. This is a breakout. I wouldn't be bullish. I'd still be maintaining a sideways bias between S1 and R1. For S3, 1.3480. For S2, 1.357. 3570. For S1, we can put at 1.3635. Let's see if that's valid. If this wick touches on the support level, I'll accept that. If it doesn't, I want it to be a bit higher. Nope. So I'm not going to keep it at 1.3635. 1.3637 it is. Zoom out. So you have support and resistance. If it breaks above S1, if it breaks above R1, bullish outlook taking aim potentially at R2. If it breaks below S1, potentially taking aim for S2. Now, if it does manage to break S1, it might want to tap into these buy orders that occurred with this strong bullish candle. So it's not unlikely that it might reach down to S2. It might be a bit gradual, but you might see significant support at S2. Just note the price action. It's accumulation of orders and then whoop, took out everybody that was short, moved higher. In this scenario, it's finding resistance already at the upper bound of the Bollinger Band, so I would maintain my sideways pass for the next 24 hours. Looking at cable, note how nicely it's uh, almost perfectly touching on R1. So we just readjust R1 slightly higher. You can see the price action here, 1.2560 as R1. Now it's broken above the mid range of the Bollinger Bands. Our size at 50. So it wouldn't be really bearish. But you do have lower lows, and this could be a lower high. So if the next 2 to 3 4 hour candles, I'd say, are bearish, if they're red, then I would maintain a bearish outlook if you consider the downwards moving trend line as well. If you take it with the wicks, it's still validating it. So this could be a market correction. Now, what I would not like to see is this moving higher and reaching this old lower high. That scenario for me would not be continuation of our bearish outlook. Instead, it could even be bullish. You have a downward moving trend line. If this trend line continues to be validated, I would maintain a bearish outlook. This could be a new lower high, and then it could continue on its descent. You have RSI at 50. Yes, so the euro strengthening, the loonie. So the dollar is losing against its counterparts. So essentially, if it continues to validate the downward swing trend line, I would be bearish. But the breaking above the mid range of the Bollinger Bands, however, could also mean that the bears may be losing control. So the next 2 4 hour candles, I think, will be crucial. If you see, let's say, for example, two bearish candles and a bullish candle sideways between S1 and R1. If it's two or three bearish candles, bearish outlook continued, breaks above this downward swing trend line, I would switch for a bullish outlook if it reaches R2. On to the Aussie. So today we had, oh, this is odd. The dollar strengthening against the Aussie, but losing against cable, the loonie, and the euro. This is surprising because if you look at your economic calendar, I what I've seen is China's NBS and Caixin manufacturing PMI figures. If you have a look at them now, they're above 50. So it implies an expansion in manufacturing activity in China. China has very close economic ties with Australia, and they demand a lot of the raw materials, hence Australian exports to China. Now, if China's manufacturing industry is doing well, so expanding at a greater pace than what is anticipated by economists, then that could also be inferred from that demand for Australian raw materials could increase, and hence demand for the Australian dollar could also increase as well. So seeing the dollar strengthen against the Aussie is something I have not been expecting to see for today. If you drop down to the 4 hour chart, it's even broken below our upward moving trend line. It's broken above the mid range, which is very odd. Let's look at the daily. If we keep at the daily, it brings us one lower, and I keep our one. This I would pay some close attention to for the rest of the day. China's better than expected PMI figures, in theory, may have provided some support for the CNY in addition to the Aussie. So seeing the dollar strengthen for me is slightly odd. I would not maintain a bullish outlook either. It's broken below our upward moving trend line. Sideways bias between S1 and R1. If it breaks below S1, I would switch for a bearish outlook. Moving on to oil, symmetrical triangle breaking below S1, slight readjustment at 82.08. Overall, easing tensions in the Middle East could be weighing on oil prices. If it So I do know that we've just readjusted our support level. So one could have said, yeah, but that was a break below, so you maintain a bearish outlook. Well, yes and no. If you look at the Bollinger Bands, the lower bound coincides with S1, upper bound coincides with R1. It appears that our support level may have been or should have been a bit lower. So this is a bit more accurate, I would say. If it breaks below S1, bearish outlook, breaks above R1, bullish, but the way I'm seeing it now, would not be surprised if it comes back up to this upwards moving trend line, which could act as a resistance barrier before forming a nice bearish candle and potentially moving down to S2. So I would maintain actually a bearish outlook for oil if it breaks below S1, so a clear break below, not just penetrating. I'd like to see a candle similar to this, breaking below S1 for our bearish outlook to be maintained. Now, on the other hand, you had an incident between Chinese and Philippine vessels earlier on today during today's Asian session. So you might have some tensions in the South China Sea, but overall does not appear to have really impacted the market, but may warrant paying a close eye on in the future. On to gold, I wouldn't be bearish. I wouldn't be short neither long. I'd maintain a sideways bias between S1 and R1. Yes, there is a big difference in terms of price, but you have the Bollinger Bands narrowing, you have the RSI at 39, so it's a bearish market sentiment. For a 4 hour, I would be bearish up until S1. It will all depend, in my opinion, on the Fed's interest rate decision. But for now, you could be, I could maintain a bearish outlook for the next 8 hours as long as it reaches S1 but fails to break below, sideways between S1 and R1. But if it manages to break below S1, switch for a bearish outlook potentially down to S3. One could also claim that it has broken an upwards moving trend line, acting as resistance, so we could maintain a bearish outlook for the rest of the day. Nvidia finding support on RS1 level 833.70. So it was support and resistance, turned back to support. Target is 955. Apple, some relief. I'd like to see Tesla. And for Tesla, I need to clear the chart. So Tesla was having, in my view, a big issue with competition from BYD and NIO. The unexpected announcement yesterday that Tesla may have struck a deal with Baidu seems to have supported the company stock price. You can see it gapped up twice, so breakaway, continuation gap. Based on this, I would be bullish on the company stock price. From a fundamental point of view as well, the Baidu story. So, in order for Tesla to sell smart vehicles in China, it needs to work with one of 20 approved suppliers for navigation, etc. So, the autonomous self driving car. That agreement could be seen as a very important regulatory hurdle imposed by the Chinese government. So, Tesla's ability to announce a collaboration or working with Baidu could allow Tesla to gain even greater control in terms of market share in China for the EV market, which could, in theory, boost sales further down the line. As such, could increase revenue, which might increase dividends, etc., which is now reflected in the company stock price. I would be bullish for the company stock price. S1 at this continuation gap, 170.73. I place R1 at 204.86. Let's turn this red, or 204.85. So 204.85. Then this old low, you can see here, 230.55. And then this old high, 263.70. So you have R1, R2, R3. RSI indicator is at 73, so implying a strong bullish market sentiment for the company stock price as well. So it appears that our bullish outlook might be also supported from the technicals in addition to the fundamentals. So bullish for Tesla. We've noted our support and resistance levels. S2 could be brought slightly higher, but we can keep S3 as it was previously. Currently, I don't see S3 being in play. And then 139.825, that's my S2. $102.75 for S3. Now, I would also like to mention that if you see another gap up, but smaller, it could be essentially implying that the bullish momentum may be coming to an end. So you have the breakaway, continuation, and then if it gaps up again, it could be the exhaustion gap, in which we might see the bulls losing some control over the pair's direction. For now, however, we would be bullish for the company stock price. And I think we have time for one more. We can do Google. That's bad for Google. Intel, JP Morgan. Let's see. Airbnb, Disney, Head and Shoulders, perhaps. BS, Petroleum, ExxonMobil, IBM. Let's look at the Nasdaq. For the last one, I'll be doing the Nasdaq. So S1 validated by 2 daily candles currently 17.8K, R2 18.5K, S1 16.9, 16,960. RSI is at 50, so we would no longer maintain a bearish outlook for the Nasdaq 100 index. Instead, we'd opt for a sideways bias, S1 and R1. If it breaks above R1, we would switch for a bullish outlook, taking aim at R2 at 18,500. Higher than that, we have 19,300. Now, if the next 2-3 days the Nasdaq 100 ends in the reds, so let's say the Fed is very hawkish, the US employment data comes in better than expected, then we might see the case of S1 being broken and then potentially taking aim for S2. So if the next 2 daily candles, let's say 3 by the end of the week for good measure, this could be a new lower high, and then it could take aim for S1 once again, and if it breaks below, could take aim for S2. Now, the way I've seen it is that we have 3 months of better than expected employment data. You have CPI, which is high. You've seen the Fed adopt a more hawkish stance over the past month or so. So the way I'm seeing this is that if I think the Fed might remain on hold, but I think they might be slightly more hawkish. I think they would be concerned about housing services inflation in addition to persistent inflation pressures in the US economy. So I think that might be a bit of a concern, which could be perceived as hawkish, which could weigh on the Nasdaq, S&P, and Dow Jones 30. Now, in the event that I am wrong and that the Fed is dovish, predominantly dovish in nature in the bank's accompanying statement, then we might see the Nasdaq, S&P, and the Dow Jones moving higher because the greenback might weaken. It might imply that the Fed is preparing to cut rates, something I do not see the case for just yet. But in the event that we're wrong, it could provide support for the Nasdaq 100, Dow Jones 30, and the S&P 500. If it's relatively balanced, so some hawkish and dovish elements, you could see it staying between S1 and R1. If we don't see a very clear picture from the bank's accompanying statement, I would look forward to Fed Chair Powell's accompanying press conference. So that might be crucial before the NFP figure on Friday. And with that, that does it for today. I'll see you all tomorrow. Thank you for watching.
So sorry about that. I for some reason could not turn on my camera. Okay, but let's just get into it. So, as per usual, a risk warning and disclaimer first. Our products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. So do your own due diligence before investing any of your money. Hey, I'm Melanie, and I will be your speaker for today. I'm an investment analyst from Everest Virtual Group, who were finalists for Best FX and Equity Research in 2019 to 2021. So here's our agenda for today. We're going to understand what makes a valid trend line and trend channel, what exactly are breakouts and fakeouts, and we're going to look at some indicators to determine momentum and look at improving the probability of successful breakouts. Okay, so let's start off with trend lines. So here's what makes a valid ascending trend line. Firstly, they should be drawn from the bottom if it's an ascending line, and not the top. Next, trend lines should have at least 3 significant touches, and 2 touches tend to be more coincidental, which is why we typically would recommend 3. So here are a couple of examples. Okay, you can see how significant exactly these troughs should be, or the swing lows should be, in order for them to be considered valid points on a trend line. Okay, here's another example, and here is an example of a descending trend line. So similarly to ascending, they should also have at least 3 significant touches, but for descending, they should be drawn from the top and not the bottom. Okay, here's another example. In this case, we have really nice 4 swing highs that touch our trend line. Okay, but 3 is enough. Here's another example. Okay, so here we've drawn out exactly how significant these touches need to be for it to be considered valid. And then we want to watch out for at least 3 significant touches, because then there could be a possibility that price would likely react off of that trend line again, which you can see is what happened here. Okay, so price actually reversed back to the trend line and is playing the reaction off of the 4th touch. Okay, now pretty straightforward. So let me know in the chat whether you guys think that this is a valid trend line or not. It's not. Yeah, Victor, yeah, trend here is down. Yeah, so it should be drawn on top. Yes. Okay, yeah, pretty straightforward. I think you guys have gotten it, so let's just move on. So now we're gonna look at drawing trend channels. So for trend channels, they require at least 4 significant touches, so 2 at the top, 2 at the bottom, and they don't need to be in consecutive order, like in this image here. Okay, so for example, over here, this is also consecutive, as in top, bottom, but it can also be top, top, bottom, or bottom, bottom, top, top. Yeah, so the order doesn't really matter as long as it's significant, swing highs and swing lows, and they touch your channel 4 times. Okay, this is an example of an ascending trend channel. Okay, now let's take a look at liquidity traps. Okay, so what exactly is a liquidity trap? So it's basically a situation in which monetary policy becomes ineffective in stimulating the economy, even when interest rates are near or at zero. So this occurs because people and businesses are hesitant to spend their money, even at low borrowing costs, leading to a lack of demand for goods and services. So in the context of trading, a liquidity trap can cause problems for market participants as it may lead to a decrease in market liquidity. So that basically means that it'll be more difficult for traders to enter or exit positions quickly and at their desired prices. So this can result in wider bid-ask spreads, increased volatility, and decreased market efficiency. So central banks actually try to address liquidity traps by using unconventional monetary policies. Okay, so some of these include quantitative easing. So they inject more money into the economy so that they can encourage spending. However, the impact of these policies on financial markets can be difficult to predict and may lead to unintended consequences. So here's an example of a liquidity trap. Okay. So firstly, we see price reversing at the swing high. Once price surpasses the swing high resistance, right, it clears the orders and then it drops below the resistance again. Okay, so another example here, price breaks out of the ascending trend line as well as the ascending trend channel. So it shoots out of it, clears the orders, and then at the point 1.04791, this swing high price reversed and it proceeded to drop back down. Okay. Okay, now let's combine trend lines, trend channels, support lines, pullbacks, and overlaps. Okay, here is just a checklist. Okay, so you can screenshot it if you want. I'm just gonna get rid of my face. Um, when I was starting out with technical analysis, this checklist was really helpful for me. Yeah, but it's just a list of things to look out for. You can find this checklist and other tutorials on the forexarmy.com website as well. But basically, for this checklist, it just tells you that if you combine multiple technical analysis methods, um, your analysis would then be more accurate. Yep, I'll just type into the chat. Just forexarmy.com. Okay, maybe I'll show you guys what the website looks like as well. Okay. Mm, this Forex Factory, sorry. Forex Army, this one. Okay, so actually it's theforexarmy.com. Okay. So here you'll find some trading guides. So we have guides on Fibonacci, support and resistance. We also have trading tools that you can download for free and just implement into your MT4. Okay. Yeah. So we have Fibonacci, how to draw it correctly, support and resistance, and a couple of MT4 downloadable trading tools as well. Okay. Let's see. So yeah, this really in-depth and really easy to understand Fibonacci guides, as well as some risk management techniques. So this is really important. Support and resistance. So all of these as well. Yeah, okay. You can go and explore this website on your own. Okay, so here's another checklist. So this is specific to playing the continuation. So you can play the bounce or reversal by firstly checking whether price respects the Ichimoku. Secondly, trend line, key horizontal support or resistance levels, any key Fibonacci levels that it is near. And these are the 4 Fibonacci techniques that we use. And where's the next key level that it might go? So you fine-tune these levels by looking for confluence areas. So confluence areas tend to be a mixture of um, Fibonacci levels as well as horizontal levels. So like your overlaps, pullback levels, as well as pivot point levels if you do use that indicator. So when you find a couple of levels that match up at the same area, it doesn't have to be a level, it can be an area, as long as it's close together, that's fine. Yeah, then that is more confirmation that your analysis is correct and that price is likely to be attracted to that level. Okay, so in this example, I have an ascending trend channel. Okay, and price is moving within the trend channel. So in this case, I'm playing the continuation, and the continuation in this case is simply an uptrend. Okay, and when I say bounce or reversal, I'm looking at price bouncing off of the trend channel, which you see over here. Bounce off it, it moves within the trend channel. So that's why we say continuation. Okay, next, another example, but in this case, it's a downward trend channel. So same thing, we are looking at playing the continuation. Bounce or reversal refers to price bouncing off of the trend, the sides of the channel, which you can see over here. And it happens multiple times in this chart. Okay, so if you were to put your entry over here, I made a buy entry to this trend channel here, and then you did that a couple of times, it would have been really, like you would have made a lot of profit. Okay, now let's take a look at how we can play the breakout. So using the same checklist, is this the same checklist? Okay, not exactly, but looking at the same kind of indicators. Firstly, does price cross below the Ichimoku? So if price crosses below the Ichimoku, it suggests that the signal that Ichimoku is giving us is bearish. Do we have the Ichimoku momentum on our side? So is it bearish or bullish? Did price break any trend line? Basically, these three breakouts basically suggest that there is a change in trend. Okay, and then where is the next key level it could go to? Same thing over here, we are looking for confluence areas as well. Okay, playing the breakout. So first example here, I'm using a Fibonacci projection. So if you're not familiar with what a Fibonacci projection is, basically you're using the extension tool. If you're looking at TradingView, it's the Fibonacci extension tool, which has 3 points. So this is my starting, middle, and ending point. And in order to use this or to recognize that you can use it, we are looking for kind of a lightning bolt shape. So basically something like this, okay, and then it moves upwards. So, and for that, we use 3 levels, 61.8, 78.6, as well as a 100%. Okay. So I have a resistance level here. We have 2 swing highs, and then I have another, excuse me, swing high resistance here at 135.147. Okay, so from this level, price has broken out of this confluence area, this multiple swing high resistance. So it's broken out of it, so we're expecting it to continue to shoot upwards towards any one of these levels. Okay, and that's exactly what it did over here. So once price reaches our 61.8, we can expect it to continue, or once it breaks out of the 61.8, we can then expect it to continue to go towards our 78.6 level. Okay, and our 78.6 level is about the same level as the swing high resistance as well. So, yeah. Okay, now let's move on. So this is another example. In this case, we are looking at a descending trend channel. We're looking at descending trend channel firstly. Secondly, we are looking at this ascending trend line. But then we notice that price has recently broken out of this descending trend line, ascending trend line. So it's broken out of the ascending trend line, suggesting that it's gonna move downwards. Okay, so 2 points, descending trend channel breaking out of the trend line. Next, we have price moving below the Ichimoku cloud. So remember I mentioned earlier that if it moves below the Ichimoku cloud, then it's a bearish signal. So we have three indicators, graphical and indicator, a momentum indicator that tell us that price is going to be bearish. Okay, so then we can expect it to continue towards this swing low support level here. Okay, and you can see that it definitely did hit where we expected it to go. Okay, another example here. Price recently broke out of the ascending trend channel, so that's point one. Point two, price is currently at this 127.2% level. So here we have a Fibonacci extension. So, okay, let me just go to our Forex Army website. If you missed our Fibonacci series, um, not to worry, but that's basically where we go through all of the different techniques in detail. Mm, hmm. Okay, we might not have that here. Okay, we have this. These are Fibonacci expansions. So they go from 0 to the negatives. And these also use that same lightning bolt shape as the projection. Okay, I think we don't talk about extensions here. Hmm, that's so weird. Okay, never mind. I'll just talk about it now. So for Fibonacci extension, we are looking at the above 100 range. So for the above 100 Fibonacci levels, we are looking at 127.2 and 161.8. Okay, and how you decide whether or not you want to use this level, you look for this shape, this like V shape. Okay, in this case, it's a little bit difficult to see because it's inverted. So it's inverted tick shape. But you can just imagine a Nike tick, just an upright tick. Yeah, so as long as the head of the tick is smaller than the tail and price retraces 100% of this initial shape, then you can go ahead and use this Fibonacci tool. Okay, so in this case, we see that price recently broke out of this ascending trend channel. It's also currently breaking out of this 127.2% level, Fibonacci level. So we're expecting price, once it breaks out, we're expecting price to continue to this 161.8. Okay, so 161.8 is also in line with this swing low support level at 0.66420. Okay, so we want to try and make sure that we line up Fibonacci with graphical levels as much as possible. And you can see here that that's exactly what happened. Okay, we see price break the level, the 127.2% level, and went all the way down to 161.8, just as we expected, caught our trade, and then shot back up. Okay, here's another example. So price recently broke out of this descending trend line. Okay, so using Fibonacci extension again, the same Nike tick shape, we can see price is currently breaking out of this 127.2% level. Okay, and we're expecting it to hit our take profit here at 85.724. That's in line with the 161.8% Fibonacci extension. Okay, and you can see that's exactly what happened here as well. So for our take profit, you can see that we have this 161.8 obviously, but it's also in line once again with a swing high resistance as well. And our buy entry, as you can see here, is also an overlap level because we have price reacting off of it from a swing low and a couple of swing highs as well. Okay, so that's all for my slides. Now I'm gonna go ahead and pull out some charts. So let me know in the chat if there are any specific charts that you'd like me to analyze. Okay, I'll just go ahead and look at gold first. Mm, okay, so let's start off with the higher time frames so that we get an idea of where prices are headed, just the general direction. Okay, we have three swing high resistances here, and we have price moving downwards. On our daily time frame, we have a swing, we have three swing highs that match our descending trend, our descending trend line. Okay, so this is a valid trend line. Okay, and maybe I'll just place my swing first resistance there and my second resistance here, or rather my first support here. And okay, so a good habit is to try and see how far back you can put your support and resistance levels. So the reason for this is because you want to see, it's easier to see how many times price has reacted off the level. So you know how significant that level is. And you can see that this level is pretty significant with price reversing off of it a couple of times. Okay, next we have another swing, another second support here. Or maybe closer here. Okay, yeah. So the reason why I chose here instead of there is because here we have many swing highs and lows. Okay. So here we are playing the continuation. Now that I have my Fibonacci levels, I'm gonna go ahead and um, add some add some Fibonacci levels to support my support and resistance levels. Oh wait, this is the daily time frame. Okay, I'm gonna analyze it on either the 1 or 4 hour time frame instead. Okay, so here's the 4 hour time frame. Let's see if we have a trend channel. Okay, no, we don't. Okay, but we can kind of, do you have a trend line? Okay, also no, because we have this area here. Okay, um, okay, we don't have any support, any trend channels or trend lines, but we will just go ahead and add some support and resistance levels now. Okay, so this is my first support. Okay, I'm just gonna make this a dotted line because price is super close to this level. But I want to highlight it because of this swing high here. Okay, and then a resistance here. And here. Okay, now let's add some Fibonacci levels. Okay, I can see that my 50% lines up with my first resistance. 50, 70, no. This is a little bit too far, but if your 50% is, like if you look at my 50%, it's kind of about my first resistance. So that's fine. Okay, next, let's add some okay, I have my 100% lining up with my first support. Okay, but this is no longer valid because price has already broken out of the 100%. So even though it does line up with my first support, I can't use that anymore. Okay, so sometimes you do see some charts that are a little bit more difficult to find Fibonacci levels. Okay, I can see that my 100% lines up, and you can see this shape that I'm using for my projection. So I'm using a projection, as you can see my 61.8, 70.6, and 100, and also these 3 points. So I'm looking for this kind of shape here. Okay, so my 100% lines up. Okay, and again, the level, or rather the tool that I use is this one over here, the trend-based fib extension. Okay, I think that's all the levels that we have for now. Now let's go in with some indicators. So over here, we can see that maybe, okay, yeah, so we can see that this 50% lines up nicely with my first resistance here. Okay, and we typically will trade according to the the trend. So here we see that price is moving upwards. So we're likely to expect it to move upwards to our first resistance once price actually breaks out of this intermediate level. Okay, so let's pull out some levels to support this. Okay, and you can see price is moving above the Ichimoku cloud. MACD is also giving us a bullish signal. So I like to use MACD and Ichimoku because at one glance I can see exactly what the signals are. Okay. Okay. RSI isn't really telling us much. Now let me pull out my yeah, exponential and simple. So I like to use these two because not only can I check each indicator at the same time, but also I can see that when there is a crossover that typically suggests that the trend is reversing, or that the trend is changing. Okay, so here we can see that currently there is no crossover between the two, and in fact price is moving above our SMA, simple moving average. So it suggests that price is gonna continue moving upwards. Okay. Okay, let me know if there are any other charts you'd like me to go through or any other questions. Okay, if not, maybe I'll go ahead and analyze DXY as well. Okay, just before the inflation reports are released this coming week, I think tomorrow. Okay, so here's our weekly time frame. We see prices generally in an uptrend. Okay, but there is a slight reversal over here. Okay, let's look at our lower time frames. Okay, so earlier we talked about trend channels, and the breakouts of trend channels. So this could be a possible breakout of a trend channel because we have two swing highs at the top as well as two swing lows. Okay, so this actually could be an example of a breakout as well. Okay, so we're still generally bullish on our weekly and our daily time frames. Now, if we take a look at our 4-hour time frame, you can see this uptrend over here as well. So also pretty bullish, except for this reversal here. Okay, but we typically will follow the trend. Okay, now let's get into our analysis. Um, okay. Even though our weekly and daily time frames give us a bullish signal, this is kind of bearish because price is breaking out of the trend line. Okay, so we'll just keep that in mind. The mix in signals, in graphical signals. Okay, and that's why we use indicators, momentum indicators, as well as Fibonacci levels and graphical as well. Okay, so this is my first resistance. Mm, let's see if there are any levels that are closer. Okay, I'll just leave my first support here at this swing low and then change this to second support because this level is closer to my first resistance. Okay. Okay, now let's look at our Fibonacci levels again. Okay, now I'm going to use my extension. So I'm looking at the above 100 levels. And you can see that my above 100 levels line up nicely with my first support and second support. Okay, so this is the V shape that I'm talking about. Okay, in this case, it's a bit inverted. If it would be like that. Okay. Okay, I have a 38.2 and 23.6 level. Okay, that both line up nicely. Okay, so we already have this confluence area here. Okay, which is why we are seeing so much resistance here at this level. Yeah, I'm gonna put my second resistance here as well. Okay, but we can see that price is breaking out of our first resistance. So once it breaks out of this confluence area, we'll definitely see it approach our first support and the 127. And then subsequently, once it breaks out of that, we'll see it move towards the 161.8 because the 161.8 is, or our second support, is also an area of confluence. Okay, we have the 38.2 and this 161.8, along with this second support, which, as I mentioned earlier, is an overlap level. Because you swing high here, swing low there. Okay, so this is a confluence area, which means price is likely to be attracted to that area. Okay, now let's take a look at some indicators. Okay, Ichimoku is giving us bearish. MACD is also supporting our analysis. Let's look at RSI. Okay, RSI, let's see if we have a trend line. Okay, we do have a trend line on our RSI. Okay, so it supports our bearish signal as well. Okay, stochastic. Okay, stochastic isn't telling us much. Okay, we see that price crossover. Okay, which means um just after price reversed. So you see this uptrend here. This is what I mean by looking for a crossover when you're looking at EMA and SMA, because a crossover would typically mean that price is likely to reverse its trend, which is what we saw here. Okay, so definitely moving downwards, especially with price moving below both of these indicators currently. So overall, all of our indicators that we've used support our analysis. Okay, let me know if you guys have any other questions or any requests. Okay, if there is nothing else, yep, hi. Yeah, Demi Lola. Yeah, feel free to type your question in the chat.
Okay, can you hear me now? Can you hear me?
Yeah, hi.
Yeah, hi. The first resistance is a bit low,
Mhm.
like the swing low. The
Um,
swing low, first resistance,
yeah,
swing low.
is
How
what?
they
Sorry?
come to that
How did I come
swing
to the
low?
first resistance?
Yes, yes, on the swing low. I mean, resistance supposed to be at the top, not bottom.
It is kind of at the top if I just zoom in a bit. Price has recently broken under it. Can you see? And also because um over here, right, at this, let me circle it here. Okay. Even though this is a support, right? So you would expect it to be a support, but price has broken under it. Okay, so once it breaks under, it becomes a pullback. resistance because we're expecting price to pull back to it.
Okay.
Okay.
Because okay, the reason why you called it force resistance because it's the nearest it is the nearest I mean that's the last bottom, right?
Yes. It actually, okay, so a resistance, you're right, should be like this. So like at the peak, right? So you're right.
Exactly.
But in this case, because price has passed under it, so I'm actually using this as my level of reference. Because price has
Okay, in
passed
this
under.
case, okay, you mean once the price pass under it under the let me say the previous low, it's become a resistance level.
Yeah, so this is what we call a pullback resistance. Yeah. Okay, maybe I'll pull out last week's slides to show you what I mean, because we still have a bit of time. So we covered this last week. Okay, here. Okay, so a pullback is like this. So resistance, similar to what we saw earlier, here is my support, right? Once price breaks under it, it becomes a resistance, a pullback resistance.
Okay, pullback resistance. Okay, once price break the previous low, it becomes pullback resistance.
Yeah, and then once price reverses back to that, it then becomes an overlap. So like over here in this example here, it's a pullback, and then if you look at the GIF, once it returns to that level, it becomes an overlap. So yeah,
Overlap. Okay, once it's gone too far, it become overlap.
yes. Okay,
Okay,
does that answer your question?
yes, I grabbed. At least I'll further my analysis again, but I understand what you mean by what is it called?
Okay.
There was the first resistance. The first resistance, the line you drew, which is the pullback resistance. I understand it
Yeah.
now.
But yeah, it is a little bit close to where price is at. So I understand your concern as well.
All right. Okay.
Okay. Okay. If
So
there are no other questions, um, yeah, then that's all for today.
why? Okay, the second resistance. Sorry, the second resistance is is clear. It's clear to me. I mean, the first resistance should be at the peak.
Oh yeah, you can place it here as well. It's just that I prefer my resistance and support levels not so far away from where price is currently at. But yeah, it can be at the peak as well.
Okay. But why did you bring the resistance to the head of the is it the head? Is that the head or neck?
Because of the swing high here.
Yes.
Yeah,
So
and because
okay,
I
so
prefer it a little bit closer to my current price. So current price is here, so I prefer it slightly lower, closer to where my current price is. But because our analysis anyway is we're expecting it to go down, so you can place it here as well. Because technically our second resistance would be our stop loss in this case, right?
okay.
So you could place it here as well. It's entirely up to you.
Okay, we are actually going for, in this case, you're actually going for a sell, not buy. So which means the second resistance should be the maximum stop loss.
Yes,
The first resistance, sorry.
will be our entry, our sell entry. Oh, yeah, our sell entry. Then our first support would be our take profit. And then once price breaks that, then we can go in for another sell towards our second support. Yeah.
So how did you come about selling this chart?
Sorry?
How did you figure out sell in this chart?
How do I what? Sorry?
How do you figure out the chart? The market is going downward. How did you figure it out? I mean, it's going on the
Because
bearish.
yeah, because this ascending trend line, right? So we have an ascending trend line here, and price recently broke out of it. So it gives us a bearish signal. And then we also pulled out our indicators. So you see our MACD is giving us bearish signals. Ichimoku price is moving below the cloud. RSI is it's moving in this descending trend line. Yeah, if I use the EMA and SMA, it's also moving below the indicators. So all of our indicators and our graphical analysis all give us a bearish signal.
Okay. I mean, I can see the RSI. I can see the RSI, which is quite short for me. It is giving us a bearish, it is giving us a bearish tone, and the MAC, which is the MACD, correct?
Yes.
The MACD is also giving us a bearish trend as well.
Yeah.
But for the MACD, I'm not familiar with it. The one I'm familiar with is just the MA, which is the moving average.
Yeah.
I'm just familiar with
yeah,
the
this
moving average.
just the Ichimoku and the MACD are pretty easy to use. So yeah, you can just read up on those and use them in your trading as well. Pretty easy to use.
Yeah, I see. I will learn that as well. It's not part of I never use it for my analysis all the while because I use MA. That's what I'm being taught with. I use the moving average, but I think I will add RSI. Thank God for your analysis. I will add RSI to it. Let's continue. I will add RSI just to know my trend and to help.
Yeah.
The
Okay.
RSI is more I think it's friendly to be used.
Mm-hmm.
It's user friendly.
Yeah.
So and now I believe the RSI what is it called? The break on the chart. Sorry, I just hope I'm not just popping more question on you.
Sure.
Okay. I just want us to be on the same page. The RSI has confirmed the bearish trend. What else again confirm the bearish trend?
Okay, there are a lot of ways to use the RSI. Here I'm just looking for a trend line here. You can also look at so if you enable the lines, so the upper and lower lines, I mean here, the upper and middle bands, right? If it's above the upper band, okay, let me make it bigger. So if it's above the upper band, it's oversold. So it suggests that price is gonna drop, as you can see here. If it's below the lower band, it means it's sorry. If it's above the upper band, that means it's overbought. So we can expect it to drop. If it's below the lower band, it's oversold. So we can expect it to go up. Okay, that's another way. Yeah, another way is by looking at divergences, but we have another webinar for that, so you can stay tuned for that as well. So we'll go more in depth because I don't really have the time to go in depth right now. But yeah, those are the 3 ways that you can use RSI.
Okay.
Okay.
What
That's
about
all the time that I have for you guys today. Thank you guys so much for joining me. Yeah, I hope you guys learned something and found this helpful, and I will see you guys again next Wednesday. Thanks, everyone. Bye.
all right, thank you. Bye.
Bye. Thanks, everyone.